NSE ASI index is down marginally by 0.17% to 37,390.28. The current gainers are UACN, Ashaka, Zenith Bank, Evans, Medical and Livestock, while the laggards are Glasgow Smith Kline, Dangote Sugar, Honeywell Flour and Dangote Flour. Well, joining me in the studio to review the Nigerian equities market is Abiodun Kepe. He's the equities analyst at Investment One. Well, thanks so much for joining us, Abiodun.
Thank you, Oyin.
Let's take a look at the market now. The market is down marginally by 0.17% to 37,390. Now, we already talked about the current gainers being, sorry, it's up rather, my mistake. The current gainers are UACN, Ashaka, Zenith, just like I mentioned earlier. But what are your thoughts on the movements we're seeing right now at, at the markets today?
Thank you, Oyin. The movements we're seeing in the market right now, I think is quite interesting. We've seen the market corrected from about the 40,000 points down to 36,000 points in terms of the NSE ASI index. And as it is, it gives some level of confidence, some level of comfort for investors and market traders to want to come back into the market. So as we speak right now, the market is up with about 0.26% based on current numbers from the NSE terminal. And the banking sector actually is one of the main mover. Banking sector on average is up with about 0.7% gain. And that gain, it's driven mostly by Zen Bank, which is currently doing about 20.73 Naira, and that's about 42 kobo away from where it closed previous day. And also access is on the scorecard. And from the industrial sector, which is up on average by about 0.44%, current numbers, Ashaka there is a key driver, up 1 Naira 64 kobo, currently doing 27.74 kobo from where it closed previous day. Nigerian Bureau also is on that card with about 44 kobo gain to 164 Naira. That's impressive numbers, impressive growth, which I think is well expected.
All right then. Well, looking at, let's take a outlook on for the second half. You expect a GDP to grow by 6.5% to 6.7%. Now, while the non-oil sector will continue to be the major drivers. Can you speak more on this?
The outlook for the second half of the year, which is quite positive, neutral to positive in terms of GDP growth. We're more bullish. We expect the non-oil sector to drive that growth, specifically the wholesale, retail trade, construction, to really drive that growth. And that's because in recent time we've been seeing some correction in the crude price. We've seen slowdown in crude output, which actually it's impacting on GDP growth, and that's why we think non-oil sector will drive that growth, and we still see the growth within the 6 to 7% region on average.
All right then. And now I would also like to get your outlook for inflation. Do you think it will remain within the single digits in the next 6 months? And which is in line with CBN's forecast?
I pretty much think it will remain within the single digits, though currently if you look at the macros now, there seems to be some shifts. The currency is currently somewhat under pressure. Reserves are gradually being depleted, though we've seen some marginal accretion over the last few days. It was at the 48 billion. Currently, it's about $47.2 billion. And that all fits back into outlook for inflation that should sit around the single digit. And that's simply because positive single digit, because if we think of the base effects previous year, that will still weigh out even to the rest of the year, which is one of the key variables I think the MPC, the CBN, is considering at the single-digit inflation outlook. However, there seems to be some risk to that outlook because the currency is currently under pressure, and it could impact on inflation if that's not well curtailed.
All right, now what's your outlook for the MPC? As you know, the next MPC is expected to hold in July, the 23rd of July.
Yep. Currently, if you look at, the yield trends in the market and interest rates in the market, the CBN has been using the OMO and T-bill rates more in terms of dictating where interest rates or yields or rates should should head towards, and somewhat has been relatively higher at the 13%, 14% region. And that's, if we read the body language from there, we want to think that interest rates should or may likely trend higher, but the CBN has been able to keep that at 12% for a while. I think there are little reasons to justify a case where we see interest rate come down or trend lower given the current dynamics in the marketplace now. So I think in the next MPC, I think they may still leave it at the 12% region, and they will continue to use the TBU and OMO rates to really ensure some level of tightening, because I think the system requires that level of tightening to ensure the single-digit inflation outlook.
Well, let's touch on the Naira. I mean, as at close of trade yesterday, it was 161 Naira 58 kobo to the dollar. Now, due to recent pressure on local currency, actually. Now, what is your outlook for the Naira, especially in the second half of the year?
Currently, the Naira, it's been pressurized, the demand pressure, corporate actions earlier in the year or mid part of the year, June, dividends and all that, repatriation of funds, impact of foreign, portfolio investment in the country and all that, and the need to want to repatriate some of these funds, given the outlook at the global economy, where we're seeing some level of stronger growth, though still fragile, but marginal improvement in terms of growth. And given what we've seen in the US, which they've actually said that they may taper down on the quantitative easing, and now all that falls back into putting some pressure on our local currency. And I think that there may be a case to possibly move upward the band of the currency, but there are three options available to the CBN anyways: move upward the band, leave the currency, let it be pressurized, try to manage it using at the expense of the external reserve, or try to curtail the demand pressure. I think the case for an upward movement is stronger currently as we speak.
Well, let's move back to the equity space. Now, what's your outlook for the second half if we're to make a call? Now, it's currently up over 32% year to date.
Yeah, 32% year to date is quite impressive performance, and as we speak, I don't think the rest of this year equities market, as we speak, has the potential to return that much in terms of growth. So I'll be looking at a neutral to positive market growth within the 5 to 10% region, and that is quite tight really, because except if we see further correction from what we've seen, then I think we should be looking at growth in the 10 to 5% region for the rest of this year.
Okay, away from the market as a whole now, let's talk about the sectors. Now, what stocks do you think will outperform rather in this other half of the year?
The other half of the year, I think the banking sector will still remain a major player. Okay. We're expecting their half-year interim numbers to come in soon, and a couple of them would possibly declare corporate action. The likes of Guarantee and Access Bank would possibly declare corporate actions, and that would be a catalyst for their prices, at least in the short term. And also the industrial sector, I believe we've seen some interesting expansion in that sector, and the numbers are coming in stronger. So I think the sector will also remain a key driver to the markets. It's one of the sectors we should watch. Then the food and consumer goods sector also is another sector which I think investors should watch out for in the second half of the year.